Good morning friends, welcome to Sharekhan pre-market view. Indian markets yesterday recap most of the losses after opening with a gap down and finally managed to close in the positive territory. Nifty put on over 44 points gain, whereas Sensex closed up by 150 points. We saw a rebound in most of the beaten down sectors like bank, oil, metal, etc., which were up. If you look at the cues from overseas market, they are also positive. US market, after opening down because of the knee-jerk reaction to the Paris attack, finally managed to end in positive zone. The Dow had a very stupendous rally of over 1.5% and ended up by 237 points. Nasdaq was up by about 56 points. S&P put on 30 points gain. This was after a sharp bounce back in the crude oil price because of the geopolitical tension and strikes over Syria. We saw most of the energy stocks going up very sharply out there. Now, given this positive cues, Asian markets are trading quite positive. There is a gain of about 1 to 1.5 percentage points in most of the Asian markets. Now, given this positive global cues, Singapore Nifty is also indicating a gap up by another 40 points today. If you look at the flows, FIS continues to be seller in the Indian markets. They sold off about 1051 crore in the cash market yesterday. They were sellers of index future of worth 646 crore, whereas DII supported the market with cash buying of 662 crores. Now, after this gap up opening, whether Nifty is likely to sustain or put on to more gains, let's have a view from our derivatives team.
Good morning friends, I will give analysis on derivatives. In yesterday's market, in line with negative cues from the international markets, our market also opened with a gap down of around 30-40 odd points. And in the initial hour of the trade, we have seen Nifty showing some kind of selling pressure. However, soon after that, we have seen a smart recovery. And slowly and steadily, we have seen Nifty inching higher. And in the mid part of the day, Nifty was not only able to go past the positive territory, but also was able to post the healthy gains. And eventually we managed to close with 0.68% higher at 7827.25 and above 7,800 odd levels. On the open interest terms, it was much of a short covering which was observed in yesterday's trading session. We have seen an unwinding of around 1.5 odd percentage in Nifty, while around 3.76 lakh shares were shared in open interest. Cost of carry did increase from 4.5 odd percentage to 9.5 odd percentage. That is, Nifty premium did came up from 12 points to 20 points, indicating a good amount of short covering which was observed by market participants. As in the put call ratio, interestingly, put call ratio still has been declining, and still we are in the oversold territory. So if there is a more upside in the market, then we won't be surprised enough. Put call ratio have been slower from 0.72 to 0.71 levels, and volatility index has been more or less same in yesterday's trading session, around 17.8 to 17.9 levels. On the options activity, since after conquering 7,800 7,800 levels, 7,800 call option have seen some kind of unwinding around 11 to 12 odd percentage in yesterday's trade, while 7,900 and 8,000 call option continues to add significant amount of build up in open interest. Have seen an addition of around 16.5 to 13 odd percentage in both the strike price. However, 8,200 call option still remains as the highest in terms of open interest. While in put option, we have seen minor unwinding in 7,600 and 7,800 strike price, while 7,700 put option, which continues to be the highest in terms of open interest with around 59 lakh shares in it. I have also seen a minor addition in open interest in yesterday's trade. So all in all, we have been witnessing some kind of a short covering, as we are, according to the derivatives, since put call ratio have been quite low at 0.7172 odd levels. And since we are in oversold territory, we have been witnessing some kind of short covering, and we do feel this short covering bounce could continue for more couple of trading sessions. And then at higher levels at around 7,900, 8,000, we can look for some kind of a negative trend from the market. There are two securities in buying period for today's trade, that is CH Limited and Jindal Steel. On FIS activity in index futures, there were net sellers by 645 crores. Now, interestingly, we have seen a sharp pullback, but FIS have been selling in both the derivative segment and in the cash market segment. In index futures, they have created some short positions in yesterday's trade, since they were net sellers by 647 crores and open interest rate went up by 1 odd percentage. While in index options they were net buyers by 1500 odd crores, and stock futures they were net sellers by 358 crores, and stock options they were net sellers by 76 crores. So again their main activity and main focus has been shifted to index options, and since we have seen in the past whenever they have been buying in index options, we are witnessing good amount of volatility in the market. So we might not see the one-sided movement in the market in today's trading session. So volatility is there. So look out for that. On the market level, our 5 days we have stands at 7833 with a lower range at 7,700 and higher range at 7840. Since SGX Nifty has been pointing on the higher side, and we might open above our VWAP level. So if in the first half an hour of trade, or first 1 hour of trade to be precise, if it's able to sustain above our VWAP level, we might see a continuation in uptrend in today's trading session. So watch out for VWAP level of 7830, 7840 quite closely in today's trade. As this SGX Nifty is trading higher, it's up by around 44 odd points at 7872, indicating some kind of positive opening can be expected in today's trade. That's it from derivatives. Thank you.
Friends, let's have a look at trading ideas for the day. The first one being ICICI Bank. Now, ICICI Bank will sell close to 6% stake in its life insurance venture to Premji Invest, which will pick up about 4% stake, and a company which is held by Temasek Holdings, which will pick up 2% stake. The overall transaction is valuing this company at about 32,500 crore. So this is sentimentally positive news for ICICI Bank, which will still continue to hold 26% post this stake sale. One can long it with stop loss of 263. The potential upside could be 275. Our next idea is MCX. Now, SEBI is likely to allow foreign portfolio investors to trade in the commodity derivative market. This would be extremely positive news for MCX, and one can long it with stop loss of 818. The potential upside could be 855 to 870. Moving on to news update, yesterday WPI came in. The inflation for the month of October fell to a negative 3.81% from negative 5.45% in the previous month of September. 8 banks submit bid to manage $3.2 billion divestment or stake sale in Coal India. Now, the stake sale at the current market price would be valuing company at 3.2 billion in terms of the overall proceeds which the government will receive. This is an overall drive by the Indian government to raise money through divestment to meet their overall target of 69,500 crore of divestment proceeds from by March 2016. Coal India is also looking to enhance washery capacity by 112 MT. The company is looking to build 15 washeries across various arms, and this would be through private firms under build and operate model. Infosys yesterday in its con call has retained its FY16 growth estimate, a 10 to 12% growth in the constant currency terms. Food safety regulator moves court against lifting the ban on Maggi noodles. India Bull Housing, the promoters, that is Mr. Gehlot and Mr. Banga, have bought shares worth 100 crore from the open market, thereby increasing their stake in the company. The government on Monday has proposed to introduce a revenue sharing model with operators for exploration and development of oil and gas blocks versus the earlier profit sharing mechanism. Yesterday trade deficit numbers came in. The deficit narrowed to 9.76 billion USD in October. Export fell for 11th straight month, down 17.53%. And imports also declined by 21.15% to $31 billion. Large telecom operators are likely to spend close to 34,000 crore in the current financial year. This is predominantly to launch the 4G technology. Tata Power is looking to hive off its renewable assets into subsidiary TPREL. Apollo acquires German tire distribution company. Now, this company is one of the leading tire distributors in Germany and operates through 37 stores and services across Germany. Supreme Court will give verdict regarding KG-D6 ONGC versus Reliance gas dispute block in next 7 to 10 days. The Union Environment Minister has allowed mining to be started in the non-forest part of the forested coal blocks. Reliance Infra's 1263 crore open offer for Pipavav will begin from December 2. Sugar output may fall by 4.6% to 26.8 million tons in the current year as per ICRA report. Sashun Pharma has received US FDA nod to market Carisoprodol. Sun Pharma has received UK nod for generic of Eli Lilly's cancer drug Gemzar. And Ajanta Pharma has launched Montelukast sodium oral granule capsules. Watches that we've created for the day: stock with positive bias we have L&T, Bharti Airtel and LIC Housing Finance, whereas stock with negative bias we have Hindustan Unilever and Coal India. Stock for long-term investment we like Aditya Birla Nuvo, Britannia, Maruti, HDFC Bank and Z. Thank you.